Good afternoon. Welcome back. We made it. Coinbase did not make it. I guess they did okay. They did all right. They opened pretty damn high, so to be expected if you open that high. Let's talk about today. So, our first red candle on NASDAQ. This is again putting into perspective. This candle is very difficult and it depends on how you're looking at it through your lens. We have shifted our lens to look through a longer term. Today could have been a very rough day for you if you're in short-term trades still. Those of you that have followed sort of what I'm doing, we don't have any more short-term trades. We actually are out of all those. We already took profit on all of those. So a day like today, if you're trying to make those same sort of short-term trades, you probably got fucked. You probably got fucked because there's a lot of things that it doesn't even, you can't even see it. It doesn't even add up in terms of the price movement. We started to see that at the beginning of this week, that we had trades that were doing that, and that started to shift my focus to, okay, I'm going to lengthen my expirations out, and I'm going to start to get an understanding that I expect this trend to continue, but the timing is not there. It's not the same sort of timing. Today's a good example because if we get a nice day again tomorrow, continuing the trend, it comes back to this whole theory behind it, how you should be sort of managing your trades, trying to guess your timing. Like, do you buy at close here today? Like, what do you do in terms of timing? Those are decisions we don't want to have to make. We don't want to do that because our probability is pretty low. And so today, okay, we had the start to some take profit. Really, the biggest thing here is that the volatility is increasing as we get up here, and that's again the reason why we want to lengthen our expiration and our horizon in terms of trading, is because it gets more risky up here, and we understand that the short-term volatility picks up, and so you can have this sort of your high to low widen as you continue the trend here. And so again, very hard to read a candle like this if you're trying to short-term trade. If you're in long-term trades, it really doesn't matter. You'll make decisions off of more than one daily candle, and that's where you take this one candle into consideration, right? It's a bit of a bearish candle. Could be the end of this trend for a day, right? 2 days. You don't really know. But if you bought long terms, let's say you bought a long term Apple here at this 129, right? If you bought long term here, you're still in this position because you're still trending, right? And that's where you can continue to push this position, even if it comes down again tomorrow or just holds flat. You could have it go flat for the rest of the week and still push it over the weekend because of the trend that we're on and this understanding of, okay, equity is going to keep appreciating. And if I put myself in a position that I can keep pushing that, that's exactly what I want to do. Today's, again, if this is how you know whether your position is manageable, our NVIDIA position, I guarantee there's someone in here and people that were trading today on just other retail traders that were in this position, but then got pushed out of the position today when you probably shouldn't be getting pushed out of this position, right? And so this might be a good example of something like NVIDIA here, where we understand that semiconductors are good, growth is good. There's a lot of reasons why we want to continue to be in this position. We wanted to capture this gain here, but we understand that there's a lot of points up here that we want to be capturing, and it may take some time in here. And that's where, again, we're no longer going to be looking sharp, we're looking more trend, and you want to be able to be in that position. If you get pushed out of it today, this again might be at a position where, well, what if tomorrow, how are you going to get back into this position? If you enter a long-term position tomorrow, you're going to have a very tough time because, again, the benefit of having a longer-term position is that on days that price pulls back or trades flat, you don't lose much value. And so that means if you are waiting now to buy a new long position, you're buying at a higher premium still because not many points are getting lost on a day like today. Whereas on short terms, those will plummet, right? Short terms took a big beating on premiums. Yeah, you can buy those at lows, but again, now you're running into the same problem of why those got beat up in the first place, right? And so, putting into perspective some of the things on growth, it was all over the place. Definitely all over the place. I'll just make a quick comment on the coin chart. Again, this opened up pretty high, about 381. Swung back and forth. this is like the most. This is literally what every single IPO looks like. So I don't know what else to say. It looks literally like every IPO I've ever seen in my life. So yeah, again, the idea of buying here is pretty silly. So if any of you bought over here, then you just don't pay attention and you don't care about money, obviously, more than I don't care about money because I even didn't put money there. So yeah. Anyway, this, like I said, is going to take quite a bit of time. The only thing we wanted to see is the interaction between this and Bitcoin came down a bit off its high. Again, you need more than one candle here, though, right? We're looking for trends, and so we're talking about a week. Let's look for how the price develops over a week, how the candles connect over a week, how Coinbase opens up tomorrow based on the after hours or during just the night. Bitcoin continues to trade. We'll see how that opening action works on coin, whether or not it tries to benchmark into it. Like if we look at a gold ETF or a miner or something, right? That first beginning of the day is just catching back up to wherever gold was overnight. Let's see if that happens tomorrow in the open for coin. Again, I'm not looking to trade it, but it's definitely something we want to see in terms of connection between the two, in terms of flows. Biggest thing today is that value did very well. Today's the start of really the earnings season. Banks did fucking phenomenal. I mean, again, this is where think about this quarter. I talked about it a little bit last week. Think about this quarter overall. We had so many things going on the trading side in terms of retail, right? GameStop going wild and in all of these different, the whole meme economy picking up. This was this quarter, right? The start of this year. And we've had so many things really make big moves, right? A lot of it tied to this gamma idea. And I think we've had a pretty good read on all of that. But that was this quarter in the end of Wall Street, in quotation marks, the end of Wall Street, right? This is the retail's got the bull by the horns this time. And then we get numbers again from banks. Now, remember, all the other earnings since sort of the a few months after COVID, banks have done phenomenal with trading. And so then this was the quarter to be like, okay, did retail actually beat banks and hedge funds this time? When JP Morgan and Goldman come out and show those numbers this morning, I mean, it just kind of puts it into perspective. It really does. And again, you're talking about so much money, and it's not even that. It's the amount of exposure and how they're able to move markets. You have to remember, we're talking JP Morgan has over $3 trillion of assets, and we're talking about $1 trillion of that is active. And so $1 trillion active in a market, they can do whatever they want. Hedge funds. We talk about hedge funds and the ability they have to move markets. Look at Archegos, 20 billion, and that was able to cause things to have major moves, right? We're talking about the biggest bank in the world and their ability. They're really got their claws deep into the market. And again, that sort of confirmation, it does lend to that longer term trading. And we'll see if there's something coming. It's not like you're not going to see a train coming to hit you. You're going to see it. The sirens will be alarmed, and you're gonna know. The reason why you could tell, like today, where it's on the growth side, and there's just sort of retail taking profits in areas and a little bit of volatility, is you look at things like the Dow, you look at the S&P, you look at energy. You know who's making the active moves today. Look at energy and oil. You know who's over here making these active moves. Retail's not over here pushing these sort of ideas that are long term and going to take a year to get pushed through, and that's all tied to inflation and bets are going on of when maybe interest rates will come back, and these sort of ideas again, they lend to equities continue to be risk on, and that's where again, based on how banks are doing and how they're trading, it's so important we get those numbers and then we put it into perspective of how they look at it. They're going to want to continue to do that, right? If you're able to make $9 billion a quarter trading, are you going to stop trading? No, of course not. Now, those opportunities become very different all the time, right? For instance, if the market is pushing up and you have the ability to move a market, maybe every now and then you want to line up a short position and cause the market to come down so that you pay on your short position. Maybe you want to put a bunch of bets on through derivatives, buying a bunch of calls to push the tech sector up. Like last year, that happened, right? SoftBank putting calls on, and then that pushed the whole market up because you know how gamma works. These different things, they're going to, start to approach. I think, again, banks, let me just use banks as an example. They know very well. They know very well the way in which this is going to move because all banks do are buyback. They just buy back their stock nonstop, right? That's their whole way of generating capital beyond just making money is that they'll cause their fucking stock price to rise so that they can raise more capital at a higher price, right? And so this is where when we start to see this move here and you start to theory craft a little bit of how far out this will start to push in terms of a trend, you're talking about all the way till maybe next earnings that just start to come in, right? So there's a lot to think about in terms of how possibly they want to pull the trigger on raising capital, how they want to buy back. We know other value companies like BRKB, for instance. We understand also their mentality of wanting to buy back. And when you see like a day like today, this trend continues. You start to put it into perspective. This is going to take time, and this is again a lot today backed up everything I've been talking about of lengthening our approach. And I think it's important that everyone really gets that and sees how yesterday you were able to make some day trades. Like we have people in chat throwing out all kinds of crazy numbers, right? It's important to see how different it already sort of feels, even just from a day ago. It's important to see that. And again, these things just sort of happen. Okay, maybe tomorrow you'll be able to make a day trade. I'm still going to guarantee it's not that same feeling. The market understands that there's a little bit more going on here, especially going into earnings. Everyone understands that there's more volatility during earnings. A lot of times we can take some sort of control of that and put trades on right now. We put some option positions on that will lead to higher IV based on earnings. And sometimes we take profit on it on just sort of an earnings play. Right before earnings, you take the profit. There's nothing really here, though, that allows us to do that because the market's already been pushing up. All of that's already been speculated. I think it's very clear that the market's already priced in anything growth-oriented. And in terms of inflation, I think that's all priced. The only thing that changes that, again, is when the numbers come in for inflation, if they're higher, that's the only thing that's going to push it maybe further. Otherwise, we're very much on a trend. I see healthy price action coming. I think the Dow, the way it's been trading, still lends to, even though that's slowed down, you can always have your money in there, and you don't feel some of these risks involved with when you have these growth companies. The growth are the ones that can hurt you, and when you look at some of these, again, you're going to need to allow some of these things to happen. Spot, for instance, you have to let this 2% happen. But if you took a trade over here that was short term, you probably just got pushed out of that, probably selling at the low even, because you're waiting for it to hit a relative point. You sell at the low, and then it continues to trend, and then it's like, well, what do I do now? Do I put a long-term trade on? This is where I don't want to be in those situations. Again, NVIDIA, the other example. Uber's a good example. Imagine being in this trade, but now you just got pushed out of it. But then if it continues to trend, what are you going to do? Are you going to buy it again? Probably not. Those type of things suck. You don't want to do that. That's where you need to just flip the switch. Okay, I'm buying 3-month out options only. I'm not going to dick around with it. Things like clean energy, again, these sort of, you get cucked on a lot of these things today. And this again is where, okay, if we have any idea at all that this sort of clean energy thing is going to get going, it's not for next week, is it? No, this is like maybe in the next few years, these things are going to really be picking up. We want to capture it obviously in a shorter term than that, but it's definitely not by next week, right? And so this is again where if you're going to take a trade like this here, again, just using ICLN as just sort of, it's got everything in there. We need something that's not getting exposed to all this short-term volatility. Because again, I bang my head against the wall every time here. And then again, what happened today? Well, these things are not very easy to make decisions when you're breaking through levels. I don't want to be putting myself in a position where you don't know what to do. Something like Blink here. If I'm going to take this trade tomorrow, I'm going to buy at least 3 months out. at least 3 months out. I'm not going to say, okay, well, it probably will push through here pretty quick. I don't care. I'm not going to bounce around. Plug's a very good example where I think I had a very good read on Plug. And look where it is here. If I'm taking this trade at anywhere, I'm not fucking dicking around here. I will buy something and I'll sit on it for a month at least before I do anything, right? And that's where, well, then if I'm going to put the capital and make a decision like that, then I better be pretty damn sure about what I want to do and why I want to put my money and spend my time there for some time, right? If you're going to make a long-term trade, you need to have a lot of macro ideas, have a lot of reasons why the flow is going to come in, and really be set on why you would do that. And that's, again, those kind of trades are going to take more work and more patience. And you're going to need to do more than just, oh, I'm coming into my level, coming into support. Let me go buy something at the money 3 months out, and maybe in a month I'll be up. Like those things, there's got to be more than that, and it's not going to be, oh, tomorrow I'll be up by 100%, no big deal. Like sometimes we get into these moods, of course. Got to be very careful, right? Got to be very careful. Today is difficult. Value did very well. So anything on oil, I just want to show some of the nice trades today. Some of them, again, we're still talking about technical trades. It's just our mindset it needs to broaden. When we look at oil, this is a very economic play. We talked about it from last Friday. Very difficult to manage depending on how you did this. Now, this is why I did. If you look at individual companies, basically all these individual companies are oil or value industrials, things like steel, right? Those did very well here today, coming off sort of the bank earnings and just expectations, right? When you look at what I did for the oil play, I talked about doing XOP and Gush. What was very difficult about this is that we opened higher on Monday, but this started to come down. There's so many things that could have happened in terms of decision making on these. And again, this comes down to what kind of trades you're putting on, in the way in which we turned this trade over the weekend from a short term into a longer term trade. The Gush trade, for instance, you got immediately out of on Monday because this was leveraged. But being able to continue this energy play, you could be in from the low here, right? You could be in from the low here on something like XOP, and then if we look at XLE, this could certainly be your low, and you could certainly be coming out of this consolidation here, this trend line, right? Now, if this is that, and this is where, again, when we're making longer term decisions, it's going to be a little different. If this is our low and we're able to get in from here, this is a big day today. This is over 4% today. And again, it was much further, and sort of confirming a trend line here. If this is our low and we can push this for 3 months, we have such a base here now that you can push this for a week. I could just have this sit flat for probably a week, 2 weeks, and I still am up probably 5-10%. And that's enough of a base to continue to do it and realize that, well, shit, everything I know about how commodities are working, how oil is going to work, and how energy companies are going to work, and how they're probably getting hungry for some M&A, right, to do some mergers, acquisitions, that this price is going to be coming up here with XLE. And so if I'm able to get into that low, and based on this timing, using some technicals to get timing, I can now push this for fucking 3 months if I need to, right? And that's where I want these type of trades here that are big ideas, right? It's not just a technical idea, it's a big idea. It's a big macro idea, and there's a lot coming behind it, just like banks. Banks, we have so many different ladders we can climb through and climb through the rungs of, okay, earnings came in, great earnings. That means I'm going to be able to at least get another few months out of these, because until the next earnings come, until next CPI numbers come for inflation, I don't really need to worry because everyone's going to speculate. And it doesn't really matter what the market does because, again, market comes down, banks will buy back. If the market does come down, well, now there's a whole reason that, oh, well, shit, what's going to happen with the bond market? How is this going to affect, again, this healthy price movement? We get into a cycle. We're in a cycle where no matter what happens, some of these sectors are going to do well. And so when you look at things like the dollar today, dollar and treasury are down today. Dollar and treasury is coming down at the same time today. This sort of action, okay, continues to lend to the fact that if the dollar keeps coming down, this, even though hasn't been correlated, is continuing to be a part of the pressure, which is going to cause equities to continue to appreciate. It's just the inflationary sort of pressure, and also the money supply continue to increase. The Fed, again, the beige book came out today, and it's the same shit, that until inflation reaches 2% or over 2% for a certain amount of time, they're not going to change what they're doing. That's not until next year. It's not even until next year that we could even start to get to it. That's just a fact. And so we're talking about this climate is going to stay the same until next year. And so that's again why we need to have trades that start now that go towards there. And so again, keep these ideas in mind as we go through earnings, that we're talking about 2022. We're not really talking about right now, because decisions being made right now are not for tomorrow. Whether we make a trade that's for over the weekend or something, again, that's not how things are being bought in the market. It doesn't matter. It literally doesn't matter. Things that are being sold today or bought today, they're not being bought for tomorrow. They're literally being bought for when that inflation comes for 2022. What is going to be happening there? That's literally any trade that's being made right now by an institution. That's all it is. They're not going, oh, how can we fuck these retail traders? Market makers aren't going, oh, how do we fuck the retail traders this week? No one's doing that. Hedge funds aren't going, oh, okay, how do we fuck them this week? Like, those things are not happening. They're going to hold for a year. What trades can you put on here for the next year? The value trade is still the most obvious, right? We know that the reinflation trade has slowed down. And so we've been taking growth trades, and we're trying to catch the growth trades because, again, like if we go through my tiers, tier 1 is still tech for the whole overall year. What's going to have the most points? Tech is still tier 1, absolutely. Tier 2, I have healthcare. When you look at these big healthcare companies like Anthem, United Health, right? When you look at those doing extremely well, and we've sort of added in some of these ideas around pharmaceuticals because, again, there's something there. There is something there that for whatever reason, we've already priced in this whole COVID situation, but these are still getting a lot of attention, and so it's more than news and things going on with, whatever you want to put into perspective. We know that vaccines will basically stop this COVID thing, but there's still something about continuing that. Especially, again, you look at Anthem; those things are doing extremely well. Tier 2, and then it divulges into this sort of a mess. Everything else that's in this tier 3 sort of area of, again, we look at growth and value, all those things together down there in terms of sectors, and it just sort of changes every now and then. But there's still this idea that Apple, we're not going to bet against Apple, right? These sort of things are continue, and that's where a day like today, it doesn't fucking matter. It doesn't matter. It doesn't matter that Apple's very far behind. These things have already sort of been put into motion. This is going to get back to its all-time high. These things are in motion. So again, very easy to look at today and be, well, I don't know. It's gotten down almost 2%. What do you think? Well, if you entered a position that you can push through that, then you're going to do very well by next week, I bet, right? You're probably going to have a hard time trying to time this dip. Did you buy it at close? Are you going to wait till open? Are you going to wait till close tomorrow? Like, those people are not going to do well right now. Tesla, how do you do it? How do you do this? What are you doing? You sold today at some point. You probably sold at the low, and then what? We're gonna buy it open tomorrow? Like, again, this is where you need to be capturing those after hours pre-market action. That's where a lot of the points are going to be right now. It's going to get more and more trendy. I'm pretty sure it's going to be more and more trendy. You're just going to need to sit in a position. And again, that's where if you did capture this move here, you took profit on it, and now you're going to push your position, your long one. Nice long position, push it. It might be months that you sit in a position like Tesla here. This whole space here with the EVs, I think is still it's very fragile. When you look at things like ARK, very fragile in terms of the flows. ETFs will continue to get flows. Today, rough day in terms of when you look at it, and again, this is where if you just start to lengthen out that timeline, this little bit of volatility back and forth, big candle yesterday, big candle downwards today, they don't really matter as long as the trend is there. And again, this is where we start to look at things in a little bit longer perspective, on a weekly perspective, and put these big ideas in motion. It's a little bit better. It's more direct. You can make a decision easier. It doesn't so much matter what your timing is. We're going to see. think today confirmed a lot of that. Again, it'll confirm it if tomorrow does well, for instance, right? That back and forth motion, that would be a very big confirmation of this idea that if the NASDAQ, for instance, climbs back up, higher high, higher low, then that's really the confirmation, because now it's like, well, what was the fucking point then, right? There was somebody that just took some profit to make a different decision, right? Just like we saw on Monday, we had to take profit in some areas to, like in travel, to go put it into growth. And look, we just did the same thing. We just seesawed back, right? Those sort of things. We want to avoid that and just climb everything. And there's a lot of different ways to do it, right? A lot of different ways to do it. We have more earnings tomorrow. Again, we're full into earnings season now. We're gonna get all the banks. In terms of capturing growth, this is where, when we start to get into some of the big tech names for earnings, this is where you just need to already be in a long-term position, because that kind of shit is not gonna fly. Like, you're not. No one cares how many iPhones Apple sold, right? That shit literally has no effect. And that's where those sort of things start to, if you're still making short-term trades, you're going to get into those earnings and be like, oh, well, I bet this will do better. That's a very different concept to banks, for instance, how they're interacting with the market. Apple doesn't interact with the market directly, right? Tech companies don't interact with the market. These big energy companies, big banks, some of the value players, they're directly interacting with the market. That flow is very different, and that's where, when we look at these sort of earnings to start, they're important in the sense of how they're making decisions and how that might be timelined. Their timeline much further out. Tech and everything else doesn't matter. It's not going to matter. And so again, in terms of trading, I'm saying in terms of trading, of course it matters in terms of what their price is. But I think we're going to have a hard time through some of there. And that's, again, where I don't want to be thinking about those things. And I don't want to be making decisions around, okay, well, next week is earnings, so maybe I should shorten up my time frame. We need to make sure we're not doing that, because sometimes it's warranted. The volatility has already shown itself. Whether or not volatility rises here, I posted a meme of UVixy. Somebody posted something really stupid on TradingView, but I was already looking at some of the VXX UVixy calls and things like that down here. We're at such a low point. We're at the lowest point ever. So we're sort of contagioned. We're almost, I don't know what the exact math is. This is probably important, but we're at basically the lowest point you can get in terms of contagion. So we're going to need new volatility ETFs and ETNs. I don't know when that exactly happens, when that's exactly going to happen. But for instance, you're going to need to, this is what happens. We create new volatility ETFs when it gets too low because of contagion. I think we're there. But also, if you think about that idea and then where we are here, if you think that's going to happen, then that means that there's some sort of understanding that there is volatility. If you are creating a new ETF for volatility, again, that just naturally happens every few years. In that there's volatility coming here based on market. The market is changing its tone in terms of trading, which would mean there's more volatility, not so much, again, on the negative side, which is all volatility does right now. Spot VIX only goes up if the market goes down, right? That's the issue with volatility right now. We know there's higher volatility, but if we're going to get into this sense that there's going to be a bet on volatility, it's very possible that we can get this here. And so I am looking for options to add. And what I'm trying to say here is options. If I'm taking a 3-month position, then I can look to take a 3-month position on volatility. Probably not UVixy, because again, it's getting contagioned out. But like VXX here at 10, taking this trade on a 3-month against my long position, I don't want to straddle. If I'm buying SPY calls, let's say, right? Again, I'm probably not doing that. But just as an example, I'm not going to straddle SPY. But what I can do is go buy calls on SPY and then go buy calls on VXX. And what's going to happen there is it's not a direct one-to-one. But right now we know that volatility only goes up if SPY goes down. But there is a chance that people betting on volatility will cause volatility to rise even if the S&P continues to rise. So you're getting a hedge in terms of a straddle. Instead of just buying puts on the S&P, though, you buy it on volatility, and it is possible to capture both at the same time, while at least being hedged 1-to-1 if the S&P doesn't go up, because the volatility will increase 1-to-1 against it. That's the correlation right now. But you can get both of them going up at the same time. But they would never both go down at the same time. That is something I'm looking at as a possibility. I wish we had a better way to do it. I really wish we had. We do not have a volatility index that tracks all IVs across the board. I think that's a failure, and I think it's purposely done because if you did, again, things would be very volatile right now. This last quarter would have been the most ridiculous volatility ever with all the gamma squeezes going, and I think it's more of a, if you did show that, then everyone would be able to see what exactly is happening in the market. I don't know if that's exactly, there's probably a lot of reasons why we don't have it, and I'm sure it's already been talked about on like a congressional level or something, but I mean, we just don't have a way of looking at volatility across the whole market. Just, you'd have to look at every single ticker and the options and the IVs on them. Like, we know what they all equal added up. So we just don't have a real number. But I would bet on a little bit of volatility here, whether, like, even if the market keeps going up, right? And so I'm looking at those. I'm going to see how those go towards the tail end of the week. Again, it'll depend a lot on tomorrow, if we just continue the trend, or if we get sort of the two-day pullback idea. We'll see what that looks like. That can set up some new long trades. I'm just positioned, but for some of you, you definitely want to be, again, realizing sort of where the moment is here. I'm predicting market just keeps climbing and climbing, so you can sort of buy in any situation. And this is where you don't want to look at a day like today and go, well, okay, let me wait for another day to pull back to then buy. You just have to remove it and say it doesn't matter. And that's going to be very hard. And I think the market's going to fucking suck at that because, I mean, there's just not going to be those signals here through earnings. It's just going to be too much back and forth. We already got it, right? The thing I want to look for tomorrow is banks. How banks continue to do tomorrow. What exactly is the timeline on buybacks? I don't know if specifically. I don't know if JP Morgan can buy tomorrow, but I would say now that those earnings did come out, I would say that they're probably they're right there and probably close, right? They're probably pretty close. I don't, again, we don't really know, but we know that they're coming because they've been allowed to. So I think it's probably very important that if you're not somehow capturing these already, you just look at, again, Goldman today. This is a big move. You got to realize that a lot of people already realize that this shit's going to happen. And so you got to kind of be ready for that, right? You got to be ready for that in some sort of sense. So definitely look towards banks. If we start to really see things pick up, then that means everyone knows. It's just when everyone else finds out, right? Everyone knows the buybacks are coming. It's when everyone else finds out that it's actually about to happen that shit will get going. I think the Goldman move is basically that, because again, it's not like all they did was not have as big of a negative on the loan side. They didn't do better trading or anything like that. They had great trading numbers, but this sort of thing is a very big sign of, okay, well, the buybacks are coming. We better go buy some positions here. Keep that in mind. And keep that in mind for when we go through the tail end of the week. That usually, again, is going to be done not during market hours, so you don't have the chance to go capture it. We're talking about 2% on the bank. You could make 50% on that with a 3-month at the money option, right? 2% could be 50% if it's after hours. If it happens from you buy it closed and it happens at open, there's a lot of points there. That's something that, again, you want to be able to get that base to go capture over a longer period of time. Value continues to do well. I would say that I talked about it. I said the Dow was going to do the best this week. That looks to be getting into pretty much the exact area, or at least the motto at this point. You got banks. You have things like again the industrial side doing very well. I don't know exactly what the spending at this point can affect in price. It's probably already been priced. The whole new $2 trillion bill is probably already all priced there. Again, now the big thing is the confirmation of the actual individual companies that are going to see direct compensation. That's the same with semiconductors, the 50 billion for semis. How much of that 50 billion goes directly to some of these semiconductors on the US side? Those are questions that we don't have answered. And we need to look, we're not going to get them in the news, we're going to get them in price. We can't buy every single semiconductor long. You can't go buy every single one of them long. We need to start to find and price some of those. Something's going on here. Those moments, trying to find those maybe by the end of the week, I think is going to be important because, again, I see the market shifting its tone. That means long positions are going to be put on those companies that institutions think are going to get money. They know better than we do. We just need to see it. And so when we look at some of them, we look at, okay, is AMD going to get some of this 50 billion? Well, institutions are probably going to start to put the money on here if they think so, right? And so we're going to look for those coming up. I think the tail end of this week would probably be the start before earnings, because you want to get it before the volatility comes in, because again, you don't want to be paying a higher price for no reason. So we'll see what those look like. Otherwise, I think it was a fun day. Again, keeping people on their toes is always important, and I think being on the long term, you got some opportunities and you didn't get hurt. You didn't get hurt. If you got hurt today, then exactly a great lesson to be like, okay, well, I'm going to shift my tone a little bit because I probably know that this move is going to continue, but I just got hurt for no reason, stubbed my toe while I'm running. I'm going to keep running. It just sucks that I stubbed my toe. Like, that's probably what today feels like for a lot of people, right? And why we have shifted our tone a little bit. Bitcoin, continuing again. I'll come up. I'm going to write a little piece on this coming up probably this weekend. Like I said, I'm going to write some more. I'm going to do a little bit more writing in terms of explaining things as we're going macro. In terms of my timing of taking profit here, it's not like IPO today, so I'm going to take profit. Obviously not. But as we get into here again, I think there's a lot of reasons to warrant the discussion of, okay, how soon do we take profit off of a move, and where exactly do you put that money? If you had $1 million, where would you put the money? That question is probably a good one to get answered. So expect some exactly that as the title of some pieces to come out. Otherwise, that's it, folks. Oil is definitely going to be a mess tomorrow. So depending on what you did there, that could definitely be a yikes, because it's either going to be up an ass load again tomorrow, like what you see here. This is up 5% today on oil. It's either going to be up another 5% tomorrow, it's going to be down 5% instead. So that's a real fun one again. That's where, if you're in a short term, you're getting fucked both ways. So you just need a long-term position here. And so that's going to be fun. And I don't really have much else. That's it, folks. I will see you in the morning. Charts tonight are definitely going to be a little sporadic. More of the same. And then there are a bunch of short-term patterns I already have in terms of tech. Again, keep in mind, if I post short-term patterns, that's just a short-term idea. The bias is not going to change. The bias is still the same. It could just mean that you get another down day tomorrow, but it doesn't mean that it's the stop of a trend or the start of a new downtrend. Those things, one candle doesn't matter. And that's exactly, I'm just going to be unbiased. I'm going to post everything I see, of course, and keep that in mind, of course. So until the bias changes, which it hasn't in, I don't know, a year, then we keep doing the same thing. Okay, so don't worry about that. I'll see you guys in the morning. Definitely take some time to look at charts and think about your portfolio a little bit and your money again tonight, because you'd want to make these decisions a little sooner than later in terms of what exactly you want to do with your money. So if you're not making short-term trades and you're trying to get a long-term understanding, I would think for yourself what exactly you want to do and how long you'd be willing to hold things, and figure out your risk reward. Some of you that are broke, you don't need to worry about it. You need to be making short-term trades and getting that money up. So I'm not talking to you. That would be anyone under 25,000, I would say. You got less than 25,000, don't worry about anything I'm saying. Just keep making technical trades. It's on support, buy it, okay? You see it on support, buy it, take a risk. You got to double that fucking money, or else there's no reason to play the game, right? And I mean that with all the love in the world. So I will see you in the morning. Enjoy your night, your evening, your afternoon, wherever you are. And until next time.